guys, what's going on? We're back with a new video for this week. It is Sunday the 10th of May and it's 1:30. Um, so yeah, last week I had quite a good response to the breakdown. So it was obviously I did it a bit differently. I did a clear chart and then I obviously broke it down so you could understand how I read the charts and stuff like that, which I had loads of messages about, and everyone basically prefers that. So I think we're just gonna stick with that for the meantime. Um, but yeah, you let me know. If you didn't message me last time, give me a message and say yeah I like it, or no it's too long or it's too short, because it might be a bit longer. But the thing is you'll learn more from it, and it will just help you see the markets how I see them basically. But yeah, that's basically that for what I was going to say about last week. But yeah, we got only 4 pairs this week. I've given I think it's about 12 pairs I gave to my members in my members zone, and it was all in depth. So one swing trade video, one day trade video. Obviously this is only like a little preview on my YouTube. I don't want to give it all away. So yeah, if you want to get involved in that, give me a message and I can hook you up. And obviously I do daily updates and stuff when I enter trades and trades I'm looking at. So we're keeping it short and sweet this week with 4. I think it's 1 swing trade and 3 day trades. There's not really any intraday trades, to be honest with you. So that's like the 15-minute time frame. I don't do that shit. I'm more like a kind of get in a trade, leave it for 2-3 days and come back to it and then collect my money basically. But yeah, if you want to get involved in it, give me a DM and I'll basically hook you up with the info and stuff like that. But yeah, without further ado, let's just get into this video. So we're starting with AUD CAD. I think I went over this a couple weeks ago. So there's quite a lot of newbies or new guys who've come to like KFX. So I'm just gonna run through it again. Bear with me if you've seen me go through this before, but it'll still be good for you to watch. But if not, just skip forward to the other pair. But yeah, so we've got AUD CAD. Obviously, it's top-down analysis, so we always look from the monthly down to the smaller time frame. So on the monthly, you can see it's clearly ranging. So like this is the resistance here. Obviously, it's going to break through, but you can clearly see it's like there's a support and resistance. It comes up, bounces, comes down, bounces, 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 and this come back down. Probably going to bounce from this region around here. So this top line isn't really relevant right now, to be honest with you, because it's just let's just move this up actually to 78, just because it lines nicer like that with these wicks here. So the top line's not really relevant because there's no prices all the way down here, like 2,000 pips away from it, but it's actually quite close. It's coming in close to this line here, so we can leave that on because it's kind of relevant. It's good you need to know the levels. So like if the price does come around here, to like close out your trade full 100% close, because it's highly unlikely that price is going to make new lows. It's 85% sure it's going to bounce from the support level and not make like new lower lows, because it's highly unlikely. But saying that, with coronavirus and all this shit, it's unforeseen, like unemployment levels, and basically all the economies haven't been working, have they? But no one's been working, so there's no money getting injected to the economy. So this could make lower lows. I'm not saying it can't. I'm just saying it's highly unlikely, because it's all about probability in Forex. So we have this level down there, which is cool. Like it's chilling, and it's clearly in a downtrend. We can see, because what's it doing from around here? It's making lower low, lower high, lower low, lower high, lower low. Or that's not really, doesn't really count this bit here. It's just this is the same leg. So it's lower low, lower high, lower low, lower high, and then the lower low, and now it's trying to make a lower high, and then we're looking for the lower low, because we're just going with the continuation. We're not trying to buy this because it's obviously bearish. Bearish means it's in a downtrend, okay? Because you can clearly see it's making lower lows and lower highs, lower low, lower high. And obviously bullish means going up and taking the green candles. It means it's bullish. That's obviously for beginners, so if you don't know what that is, you need to go do some research. I'm not here to teach you everything. So yeah, we can clearly see it's in a downtrend. You've got 1 touch, 2 touch, and now this is like the 3rd touch here. So we can clearly see that price has come up to this level. People might be like, oh, it's broken out, it's broken out. But the thing is, with trend lines, you can't just it's not the be all and end all. Like, you need to look at the overall bigger picture. So prices come up. Last week it closes as a shooting star. This week not really much. It didn't really close as anything. So it's all about how the wicks close. Reading candlesticks is like the holy grail of trading. That will really change how you trade. So definitely do some research on how to read candlesticks. And if you don't, I mean, if you want me to do a video, DM me and tell me you want me to do a video on it, and I'll do it. But but for now, let's just go over this. So we got psych levels 1,500, one. It's kind of rejecting this 90. Let's double click it, and type in. So I'm big on psych levels, because psych levels is what the big banks and shit they have big sell limits and buy limits around these psychological numbers. Is there structure? Let's have a look. So you got one support. Oh, look at that one, another support. Oh, look at that, another support there. So this is a big structure zone. So let's just highlight this. Okay, so you can see. So you've got structure to the left. It's always gonna be to the left because that's past price action. So you've got structure. Do we have a fib level? Let's have a look. So fibs, you do from the last significant high to the last significant low, like where the leg finished. Now it's having its retracement, and now we're looking for this to reject, take this lower, because we're going with trend. We don't go against trend because that's what retards do. Okay, simple stuff. We're not retards. We're not trying to buy this because it's still respecting this downtrend since how long? It's like January, I bet you, or February, or even up here. It's like March 2017. So. And if this breaks out, fine, it's broken out. But like, we're just going with the trend until the trend tells us otherwise, basically. So we can clearly see this pink zone is like our zone for rejection, basically. And what did we have last week? We had shooting star. This week, we did have some rejection, but it's not perfect. But this zone also lines up with the 71% fib, which is like my favorite fib level. If you don't have it on your fib, add it, because it's basically my fib level that I've added, and I've back tested it and it works, and it's part of my strategy, so I'm giving that to you for free, so you should thank me for that. But anyways, what do we have on the daily? We have, like, this was the whole of last week. We had spinning top, spinning top, spinning top, shooting star, shooting star, shooting star, shooting star. So we basically had the whole week worth of just, or even more than a week. That's like 2 weeks of just rejection. So price is obviously, slowing down, and it can't go any higher. It's like you can imagine this is the ceiling. It's coming up, and it's trying to push higher, trying to push higher, trying to push higher. Can't do it. Tries again, pushes, and it's literally it's going to do this, and then it's going to go, and then because it can't break any higher, the only other thing it can do is have a sell-off. So pressure's building up, then it'll go bang, and it'll sell off. So now we're looking for this like U or N shape, lowercase n, or an upside down U if you want to call it that. And it's like this. I call it a roundabout, but some people don't like that because they don't know what roundabouts are for some reason. But yeah, if you see this kind of like formation and you see the rejection which we're seeing now, then this is eventually it's going to sell off. So like we can see on the weekly, slowing down. These massive candles are really like big momentum to the upside, and then candle wick rejection, and then a sell off. We can go back and see what price has done before. Here, price comes up, shooting star, doji, not doji, spinning top. There's the U, there's the formation, and then what happens? Bang. So if you sold it here 97 and all the way down to 91, that's like 600 pips. It's not always gonna be perfect. So you got shooting star, spinning top, and then it's massive sell off again. And bear in mind this is the weekly, right? So if you go into the daily, you'll be able to see it's even better. You'll be able to see all of it. I'm not gonna keep doing it, but because it's just boring. But like, so you got here spinning top, doji, shooting star, sell off. So you got like 5 days of rejection, and then you sell it. Here's the same, here's the same. But it just happens again and again. So like, I don't need to explain it. If you don't believe me, go back test it because it works, and that's my strategy, and it fucking works. So yeah, that's basically the candle wick stuff. So what we got? We got structure. we have 71% fib level. We have a cycle level of 91.5 at 0.915. We have candle weight rejection on the weekly, and we have candle weight rejection on the daily as well. To be fair, the EMA is not the greatest. It's kind of annoying me. If you see it like this, it's like it was rejecting the EMA, this weekly EMA, for so long, and now it's above it. So it is pissing me off a little bit. But you can see here it came above it and sold off, and it came above it and sold off here. So it might just be doing that. But even on the monthly, it's clean as fuck. Look at that structure. You can clearly see it's coming up to retest, and it's gonna have a sell off. So bear this in mind, and let me stick this on. So that's like 5 confluences. So if you're not in this, don't get in it yet. I think I'm in it from one of the top of these wicks here. Me and my team are. But if you want like the sniper entry, I mean we're already in it from up here, which is like, and if you want to get like another 30 pips like difference, then just wait for it to come up to the psych level 91,500 and wait for rejection on a daily. But yeah, it's literally that simple. Like that's how I've seen this. It's a swing trade, so it might take a couple months to come. It was down here about 2 months ago, and then that's about 1,000 pips, I think it is, isn't it? Yeah, 1,100 pips. It's a 6 ratio, and you can have your stops like I don't know, I'll say 100 pips. But you know, it's all about ratio. If you think 100 pips is a big stop loss, it's not, because you just got to do the relevant lot sizes to what 1% of your account is. And if you don't know how to do that, go onto my Instagram. I've got a video on it. It's called how to manage your risk or some shit. Check that out. If you don't know the formula, it's all there. It's a little dude basically telling you how to do it. And yeah, obviously I'll be taking partial profit, 50% off here, 25% off here, and obviously my stops will be at break even as soon as this comes down to here, and then it's risk free, and then I'm going to be taking this all the way down to here. This might take like 6 months, but it's what swing trading is. I have one separate account. I have a day trade account, and I have a swing trade account, so I keep it separate, and then I can leave my swing traders do its stuff and just make me money, like, in the long term. And this did definitely happen with the whole coronavirus stuff going down, and how heavily AUD, the Australian dollar is heavily impacted by China. Basically, yeah, because they're so reliant on China. Their economy is it moves very similarly. But yeah, so worst case scenario, we take this just down to here, and you can close out the whole thing if you want to, but it's still a 5 ratio, and it's 1,000 pips. So, but obviously, I would be taking like half off here, 25% off here, 25% here. So that's what I'm kind of seeing. So we got 5 confluences, we've got fib level, structure, psych level, weekly rejection, and daily rejection as well. But we usually have the EMA, but the EMA is not the best, so I'm not going to add that into those confluences. But so that's AUD CAD, like it's that simple. You can see it on the monthly; it looks a lot cleaner. That's it. That's what trading should be like. It's this simple. You don't need to overcomplicate everything. Okay. So we got AUD USD. It's clearly in a downtrend here, and it wasn't an uptrend because you can see this trend now being respected, and now it's obviously broken it, and now it's basically in a downtrend. So it's been in a downtrend since 2013. So you could be like, okay, cool, I'm gonna stick a thing on it, and I'll be like, yeah, that's 1 touch, 2 touch, 3 touch, and we could have gone on that, but that didn't happen. So we can clearly see this is like the outer trend line, so that's cool. We can just leave it there, stick it on, and then so now we know it's in downtrend, so you know what's up. And we can also like go down to the daily, and we can have a look if there's a trend line in play. We know we just got to play around with it. This was one like this, and then what happened? It's broken above it, and now it's retesting to go higher. This is what I think personally. So you can stick that on like that, and it's obviously it's retested it, and it's retested the EMA. You can even do this, fib this from the low point here, and it also came down to the 61.8, and it's uh, to go higher basically. But let's just clean it off for a second. So we can clearly see that it's broken this downtrend, this smaller downtrend. So obviously we're in a downtrend. If it comes, we're still up here, it's still bearish, right? But this trend within a trend is now broken, okay? And let's go down to the 4 hour and stick on a trend line. So we can delete that now because we know it's broken. It's fine. And this is literally me just playing around with like some trend lines because trend lines are subjective. You don't like it doesn't really matter as long as you've got 2 touches. That's all that makes that just to make a trend line. So you might be like, oh, what's he doing? Oh, he's got so many trend lines. He said it's bearish, but he's bullish. The overall trend is bearish, so it's downtrend. Yeah, okay. We can clearly see this in a downtrend, but there's trends within trends. Like this trend here is bullish within the downtrend. See, it's going up, higher high, higher low, higher equal high, higher low, equal high, higher low, higher high, higher low, higher high. So it means it's going up, doesn't it? And then what happened? It broke out and it started making lower lows and lower highs. And now it's making higher highs and higher lows basically on a smaller time frame. And now with day trades, we're just trying to get on these smaller moves within the bigger trend. It's that simple. There's nothing you don't need to overcomplicate it. It's just there's trends within trends, and we're catching the smaller moves within the bigger trend. That's basically day trading. So for me, so we can clearly see it's making higher highs and higher lows. We have, if you go on the daily, I prefer this trend line. Not gonna lie. I prefer that trend line, and we have obviously 1 touch, 2 touch, 3 touch. So this might just go off now because 3 touches is the highest probability, and it's like 85% probability that's gonna have some kind of reaction. We also had it rejected the daily EMA and kind of the 64 psych level. So if you go to the 4 hour to zoom in on this, I'm going to fib this from the last significant low to where I think the price is finished, but this might keep going up, then you just have to move the fib. So if this does give us a chance to get on this and it retraces down to the 60, you know, I want to see price kind of retrace to this psych level plus its structure, because look, resistance again, and then obviously it broke up and then it retested as support. So structure, okay, it's literally that simple. Let's stick on this box. Yeah, so 64. So if price can come down to this kind of level, this kind of region here, this pink box zone, I'm gonna be looking for like, you know, some kind of like big, like these wicks, this kind of wick into this zone. Because obviously you got a 78.6, but people think, oh, as soon as it goes below 78.6, it's the trend's changed. No, it has to have a clear 4 hour break of the 78.6. So what's a 4 hour close below 78.6? When the candle body, see the body? The wick isn't the body is the actual like green thing. If that closes below this, then yeah, it's bearish, but until then, if it just wicks down like this, gets you in, and then you're in it. See what I'm saying? So this is what I'm kind of looking for, and then we could go long position from here. Let's just say it happens from here up to the 61.8, taking partials here, here, and here, and then stops just below. Yep, just give it some breathing room like this. So like if price does come back into this kind of liquidity zone, where the liquidity is where basically the wicks are. So like here, one here. So if price does come down to fulfill this like liquidity zone here, then you're fine and you won't be stopped out basically. You might be in a bit of drawdown, but that's not a big issue. Yeah, so that's that on the 4 hour time frame. Let's have a look. Let me zoom out a little bit. So let's go back onto the weekly. So obviously we can see, yeah, how many touches does it make to take a trend line? 2, okay. So we have this outer trend line, and then I can see there's one big like peak up here and a peak here. So that can make a trend line too. So let's stick that on. 1, 2. Yeah. And delete this other one because I don't want that on there anymore. Just making it confusing. So we have 1, 2. Okay, so this is like, you can call this the outer trend line. So is there anything significant about this? Is price coming near it? Yeah, it kind of is. So we need to see where a reversal could take place. So let me have a look. So I can see there's obviously, you know, the structure point here. There's like a liquidity zone. There's massive wick down here, wick here, wick here, wick here, and yeah. So we can clearly see that this is kind of a zone that price is rejecting from, and was previous support. So is that near? Is that near any strike levels? 67, 67, or you could also say 67,500. So you could stick that on there if you want to, or you can stick it on there like this. But I think 67 is good. So you stick it on and we go 67. The only it's 50 pips difference, so it's not like a big deal or anything. So obviously you've got a structure is there. So let's stick our box on. Okay. And go back on the daily and we can clearly see, yeah, that price is coming up to this zone. Okay. Let's go back on the 4 hour. So you can clearly see that 60 on our final take profit zone is getting close to 67, right? So I personally, for me, once this gets hit, I'm closing the whole trade and I'm not going to be buying this pair anymore, because I'll be looking on the daily for rejection. You know, for some kind of rejection. You can even move this a bit closer to the top. You know, I'll be looking for some kind of rejection from the top here, because obviously this might take till July to actually reject. But, you know, if it's getting near key levels, you don't want to keep selling something when you know it's in a downtrend still, because you can see it on the weekly. It's in a downtrend and it's coming up to the level this kind of significant structure point as well. So, you know, in July or, you know, late June, July time, this could be a good swing trade for us. So this is how I identify swing trades, because it's on the bigger time frame. It's going to be a third touch, and if we see the correct rejection from the structure point, it's probably going to be a fib level as well from here to here. Yeah, 71.8 fib level. Look, literally aligns perfectly. So you've got 78.6 fib level. Probably have the obviously the monthly EMAs come in slowly. So we don't really have an EMA, but we have a fib level, we've got cycle level, we've got structure, probably candle rejection whenever it happens, and then we can look for take shorts. But for the minute, I'm looking at longs. We are aware of the bigger trends, so that's fine. There's nothing to get like, you know, shit yourself about. It's just there. It's good. We need to know it's there. So if price comes back down to this kind of cycle level, the cycle level 64 and the 78.6, I'm going to be looking for candle rejection. So that's doji, spinning tops, all that kind of good stuff. Rejecting this zone like at least 3, and then once that happens, I'm going to get on this, and I want to take this all the way up to 66,500 probably, the cycle level 66,500. So that's 250 pips. That's a 4.3 ratio, and yeah, that's looking good. If this doesn't reject this zone, this is what's going to happen. It's going to not reject. It's going to break through, and it's probably going to retest it, and it's going to be bearish, and then we can look to take sales and something like that. But until the trend tells me otherwise, my bias. There's no point me telling you, oh, it's going to do this or it could do this. Yeah, it can either do that or it can do that. Everyone fucking knows it's either one thing or the other. It's not hard to predict that. But what I'm saying is, from what the trend's telling me, the probability of it going up higher is very high compared to it actually breaking trend. So that's what I'm telling you. That's what I think is going to happen. There's a lot of people out there just say, oh yeah, this is one option or this is the other option, and then they don't give you the actual bias of what they think is going to happen. So, and at the end of the week, you're like, yeah, I told you it was going to happen. Do you know what I mean? It's just bollocks. So I think I'm 85% sure this is going to go higher. If it breaks down, you know, that's part of the market, and it doesn't reject, I'm not going to lose anything, because if this doesn't reject, then I'm not going to take a trade, and then it's, you know, you just got to adapt to the market and move on to the next trade, and that's fine. But my bias is upside, because that's what the trend's telling me. Cool. So that's AUD USD. So we have. I'm just going to run it through real quick. We have daily EMA. We have cycle level. We have a fib. We have ascending trend line and candle rejection if we see it. So that's going to be 5 conferences to take along. Cool. So it was. If this fucking loads, come on. I don't know why it's taking so long to load, but yeah. So if you got any questions about swing trading and stuff, it's not particularly. I think everyone tries to make it out as like really, it's a really like mad skill to have. It's a mad skill to have, but it's not particularly hard. It's just basically what you're doing, but on a bigger scale. So like if you're doing day trades, it's that, but on a more significant time frame. Basically, it's literally that simple. Um, so I don't know why the Wi-Fi is so shit. Hang on. Okay. So what do we have? What do we have? Right. So we can clearly see on the bigger time frame. I don't want to go on the monthly because this is a day trade, it's not swing trade. But we can clearly see it's been rejecting this since January. This like outer trend line, that descending trend line. It's making lower low, lower high, lower low, lower high, lower low, lower high, lower low, and obviously now we're looking for the lower high on the bigger time frame. On the bigger time frame, and if you really want to be properly like this, you go okay like this, and delete that one, and then have it like that. But that's just bigger time frame. Just go on the daily. What's going on? It's good. We need to have this out here so we know even if this breaks. So this is a lower low, lower high, lower low, lower high, lower low. And if this makes a new up here, up like this, and it takes out these, it's still bearish because it's lower to that. So we're just zooming in a little bit. So you guys got to be aware of this. And then you can have this. So this is like what we're looking at here. One touch, two touch, zoom in even more. So that's what I'm seeing, one touch, two touch, looking for the third touch, the continuation, stick a fib on it from the last significant point down to where it was. What can we see? What we got. Right, do we have any, let's go on the daily, we got any structure? So we got big structure point here, so stick it on. So structure is where support was, and we have all these candle bodies that closed above. All the candle bodies you can clearly see here closed above this level is 78.6, and it's the structure point of 17.117. Cool. So we can see it. We can clearly see a psych level. So psychological level is big round numbers. Like I said 1117, 1116, 1116, 500, 1115, 1115, 500, all that good stuff. What else we got? Daily EMA. Let's have a look. So we've got the daily EMA coming in, which this actually looks quite good. The daily EMA could be like doing this, and then the price could be coming like this, and then we could see the rejection on the 4 hour, and then we can look for that's another confluence for a sell. So at the moment, this is what I'm kind of seeing. We got fib level, descending trend line, psych level, daily EMA for a short if it rejects. If we see candlestick rejection on the 4 hourly. So what do I mean by candlestick rejection? Man, if you know how to read candlestick rejection, you're making bank. So like last week, I said to the guys, they were like, "Oh, I'm not sure," and I said, "Nah, look at this candlestick rejection." You see every time dojis and spinning tops make it an impulse to the upside. Doji, spinning tops, shooting stars, hammers, all that stuff. And then here, what happened? Shooting star, doji, spinning tops, shooting star, doji, and that's 4 out. That's like over 20 hours worth of rejection here. So if we see this kind of reaction here, we see this here, then we're good to go. We're good to go for shorts. Yeah, so 100 pip stops, nice, and then we'll take this all the way down to the 61.8, the continuation. So this might take till Wednesday to get up here, and you might think that's a big stop loss, but it's not because we're doing like this is more swing trading. like so you've got intraday trading, which is like 15 minute, 30-minute time frame bollocks. Then you have day trading, which is like you take a trade, you have 2 to 3 days, and or kind of like you have it over the week. Like take it on Monday, close it on Friday, you make like 400 to 500 pips. A couple hundred pips. And you have swing trading, which is like 2 weeks to 4 months kind of type thing, and you make 800 to 2,000 pips. All just depends on the market volatility, but now you know what the difference is. In my opinion, that's what it is. If you think it's different, good for you. I don't intraday trade or that 15-minute bollocks. I might scale down 50-minute for entries, but I don't do any of that. Like, oh, I just got 5 pips. Yeah, let me go open a bottle of champagne. Like Christ. But anyway, I'm going on a rant. So if we see price come up here and reject from the what we got? So we got from the descending trend line, the golden pocket fib levels, like it's in the golden pocket between the 78.6 and 78.1, 71%. So that's 2. Psych level 1117. Structure. I should have put structure on basically, so you can have this like that. Structure, and then a candle rejection for 6. That's 5 conferences for continuation. Why are people trying to buy this? It's clearly making lower low, lower high, lower low, lower high, lower low until this breaks out. Then we can buy it, and it's going to make, like, if it does this, then we can start buying it. If it does this and does this, it just annoys me when people try and buy shit like this, and it starts doing this, and then we can stick this on, and we can go, okay, cool. There's the trend line. And then we look for the third touch, because third touch is our favourite probability. And then you look for this touch here, we can fib it, and then we can buy this up to here, whatever you want to do. You know what I mean? But until that happens and breaks out, I'm bearish. It's literally that. It's easy to understand. And look how clean that looks. Look how clean that looks. It's not this bollocks. Like, go on TradingView and you go on ideas and you see some of people's charts. It's fucking embarrassing, man. So yeah, Euro JPY sells from this level, around this level, if we see rejection. No rejection, no trade. Sweet. And then finally we have gold. So we can clearly see gold's been at all-time highs for ages, and it's basically needing a correction soon, I think, because you can clearly see here it was at 100, 112 this level, and now it's all the way up like 500, 5,000 pips above it, and this looks like overstretched as fuck. So we can clearly see that's out of trend line. We can see it in the trend line here. Call it like this. Do you want to do so this is like the inner ascending trend line, and they go on the daily. And then you can stick another one on here. It's broken it, to be honest with you. So like this was doing this, respecting this, but now it's trying to break out. And obviously you can clearly see it's respecting this daily 50 EMA. So it's in an uptrend, but it's nowhere near these lines. So you don't really need them on, to be honest with you. Or you can keep that one if you want to. So what we got on the 4-hour time frame. It's not really holding to any particular. You can stick this one on here if you want to, if you really want to, but it's in a wedge basically, because you can see this here. So it's in a wedge. So that means there's going to be a massive breakout to either side. My favourite is downside. I mean, news is telling me upside because how shit the US economy is about to happen. What the shit's going to happen. So it means gold's going to go up, but at the same time, all the technicals are telling me downside basically. So I'm actually in this. I did post this on Friday, and I did give it out to my members. But basically, I said just make sure we don't get stopped at break even. Put stops to break even because NFP was out on Friday. So this is what I did. I fibbed it from the last significant point to here. Literally came out to tap the 78.6. This double top 1, 2, and it had candlestick rejection on the 4-hour time frame to take shorts. But I was just being careful because NFP could probably fuck you. So I said stops at break even, and then it went up to break even. But I literally had my stop I think it was like 80 pips above it, and it was only like a small lot size, so it's nothing crazy. So yeah, this is what could be occurring. Something like this. short from here. I think I had like stop just above this, just to like give it a little breathing room. And obviously take it all the way down, but obviously take partials 1 here, 2, 3, that kind of thing. That's what the technicals are telling me. So I'm like sitting 80 pips or something up right now, or how much is it? Actually no, 200 pips. My bad. 200 pips up. Nothing like it's pretty decent, but you know gold can easily retrace within seconds. You know what gold's like, it's a beast. So I think if price can come back up to this level here, to make a triple top, because you still have some room for this to come, and like if you want to be like this, you can put the trend line to this top of the wick here, and you can say, oh, price still has some room to come back up and touch this one last time. And if we see rejection, then take a short. If you see rejection on the 4 hour time frame, take a short if you want, and have your stops pretty close, like a 60 pip stop. Remember to do. I wouldn't even do more than 1% at all on trading gold. Don't try and risk it. So that's my bias, but also you could say this could be happening. It could be a long, because you know breakouts. You can't predict what breakouts are going to do. And then you know you have some kind of retracement to these like this liquidity zone here. You know maybe like 1990, something like that, and then it goes and it breaks out the upside. You know, back up. That aligns quite nicely with the resistance here, literally perfectly. So that's the option 2. But my bias is the first one. Personally, that's what I think is going to happen, just because it aligns better. But as I said, with the whole news thing, you got to be careful with gold, because the US economy is about to go fucking tits up, and that means the gold will go up against the US dollar, basically. So you just got to be aware of that. Cool. So that is it for this week. I'm gonna be moving into my office in the next couple of months, so I'll be able to do I'm gonna be doing like lots more content. So it'll be like 4 or 5 videos a week, more IGTV stuff, and just expand a little bit more. But with coronavirus and stuff, it's kind of hard to get the office, like go in and have a look and all that stuff. But if you can and you like my content, please support it. Like the video. Subscribe, share it with friends if you think it will help them. I'm all about education. I don't do that signal. I don't do signals. I basically have a group where I put all my daily setups, and it's basically like breakdowns like this every day to basically help you understand what I'm seeing and reasons behind it. So it's not fucking signals. It's just education. That's what I've created this brand for. So please show some love. Let me know what you think of the video. If you liked it, if you didn't like it, leave it in the comments. And yeah, I'll catch you guys in the week. See you later, guys.